Okay, hi there. Welcome to a video looking at a walkthrough of a 25 mark essay plan for a question on UK trade, given the UK is now outside the European Union. So I'm going to walk through a suggested answer to a 25 mark essay question for Edexcel. With the 25 marker, you've probably got about 30 minutes maximum to write the answer if you get the timing right in the rest of the exam. So we're looking for you to write a 5-paragraph response, interspersing the evaluation with your analysis. So KA, knowledge application analysis, first paragraph, and a second paragraph evaluation, then go for another evaluation, another analysis paragraph, followed by a second evaluation paragraph, and then crucially the final reason comment. I'll say something about that at the end. And certainly encourage you to include a developed diagram. I'll give you a couple of examples of that as we walk through the answer. I think with the essay questions, obviously compared to the data response, it is very handy, very useful to have a good working contextual knowledge of events, policies, features of the UK and the world economy. So if you've got that contextual awareness, it makes a big difference. We're not talking masses of data, we're just talking an awareness of key issues and themes, particularly for these 25 mark questions. Also, develop your explanations, use chains of reasoning when building the analysis. Don't rely too much on assertion. Very important to answer the question, not the topic. So please do answer the specific question that's been asked. And don't just rely on writing everything you know about the concepts in the question. Quality is always better than quantity, particularly if you get the analysis and the evaluation spot on. And the evaluation needs to be fairly well developed. Don't just add it as a sort of hanging on at the end. Try to develop evaluation using similar chains of reasoning as you would do with your analysis questions. Now, with the Edexcel essays, you very rarely get any significant context. This is going to be a question about UK trade outside of the European Union. Let me give you 3 bits of context just for information anyway. The UK signed a free trade deal with Australia at the back end of 2021. Australia is our 14th biggest export market, but it only accounts for about less than 2% of our trade. And the UK government's impact assessment estimates that in the long run this trade agreement is going to add a little per year to our GDP. However, another interesting development is that the UK has applied to join the Comprehensive and Progressive Agreement for the Trans-Pacific Partnership, a free trade deal between 11 countries, essentially in the Far East Asian region, including Japan, Malaysia, Mexico, Singapore, Vietnam. That's quite interesting. And other countries are also looking to join, including China, Taiwan, and South Korea. Already, CPTPP accounts for just under 9% of our exports, or £1 billion a week. But although we've left the EU, the European Union, single market, of course, customs union, is the UK's largest trading partner and will remain so. £5 billion a week of exports, 42% of our exports, obviously affected by the pandemic. Even bigger volume and value of imports coming in. We run a big trade deficit with the EU. The share of UK exports accounted for by the European Union has actually fallen quite sharply over the last 15 years, from 54% down to 42%. As I say, with an Edexcel essay question, you're not going to get reams of context. You might just get an introductory bit similar to this. Since the UK left the EU single market at the end of 2020, the government has sought to complete a number of free trade deals with countries such as Australia and New Zealand. So let's have a look, a little walk through together this question. To what extent will free trade agreements with non-EU countries benefit the UK's macroeconomic performance? 25 marks. Crucially, again, try to really zoom in on key aspects of macro performance. Go back to your year 12 economics. Inflation, growth, jobs, investment, all that kind of stuff. They're all useful indicators to bring into the answer. So we're looking for a 5-paragraph answer. Here's my first knowledge application and analysis point. So one argument for leaving the customs union and single market is that it's given the UK the freedom, the autonomy to strike free trade deals with non-EU countries. An example being the application to join the CPTPP. Cutting or abolishing import tariffs is a form of trade liberalisation. Let me just highlight these words because this is where you can bring good concepts into the answer. So it's a form of trade liberalisation. This will help to bring down the cost of imported products such as agricultural goods, which will help to control cost push inflation. So trade agreements which bring tariffs down is a way of reducing inflationary pressure, cost push inflation. Then I developed this point. A drop in inflation helps to protect the real incomes of households, incomes adjusted for inflation. So I like that concept there, especially those on relatively low incomes. So linking there perhaps to the cost of living pressures faced by families. And a free trade deal would encourage UK businesses to export products, so hopefully export growth. And I'm just putting a bit of application in there. Things like cars, we're good at pharmaceuticals. The UK has a comparative advantage in professional services, so we can export to new, faster growing countries, which will act as an injection of demand into the circular flow. Bit of year 12 macro there. Don't be afraid to use that in your year 13 economics. Bring those into paper too, thereby helping to boost UK real GDP growth. And I'm using the word real GDP to emphasize that, via possible export multiplier effects. So if trade generates increased exports, there could be positive multiplier effects. Do you see what I'm doing here in my first KA point? I'm building the point that it's going to help bring down inflation and drive export businesses, and I'm bringing in concepts I used in year 12 economics. A developed diagram is a good way of showing this, so I'll probably use ADS actually. So let's take an initial equilibrium of AD1 SRS1. Now if the trade deals generate exports, aggregate demand will shift to the right, and notice that I've included the export multiplier, emphasising the shift in AD. Now that drives higher growth of GDP but could cause inflation. But of course in a previous paragraph I mentioned that the trade deal would cut the cost of imports. So if imports become cheaper, can you visualise what happens to aggregate supply? Well, it shifts out to the right because we've got rid of some of those import tariffs. And again, I've just highlighted that in the diagram. Cheaper imports from lower import tariffs, which brings prices down, also drives growth, increases real incomes, and takes us to an equilibrium of Y3. That is a very good developed diagram because I've shifted both AD and AS and linked it to these free trade deals, and that will be a very good diagram to use. If you wanted to, you could include the long and aggregate supply and the extent to which the economy is close to or just below or above potential output. So don't be afraid to use good ADAS diagrams from last year to help your analysis. However, a counter argument. I quite like that little phrase there as part of the evaluation, a counter argument. I'll give that a different colour. Let's put that in blue. Hinting at evaluation. Well, the counter argument is that the European Union remains the biggest export market for UK businesses, over 40% of our exports. And although the UK has signed a free trade deal with the EU, as well as Australia and New Zealand, there are numerous non-tariff barriers, NTBs, that remain. Many of them are linked to things like customs, paperwork, and the rules of origin for things like farm products. And a lot of small businesses are finding it very costly now to export to the European Union outside of the single market now. So yes, trade deals with Australia and New Zealand boost our potential GDP, but they're not going to make up for the loss of trade with the EU. Indeed, Context 1 says that the long-run impact of the agreement is to increase GDP by less than 0.1%, which is tiny given we grow by 2.5% per year. So I'm arguing that the trade deal on its own with these countries will have little impact on the UK's macro performance. And just right at the end there, I'm going back to the question. It's always good to go back to the question. It provides a degree of coherence in your answer. My second KA point, paragraph 3 of 5. A second argument that free trade agreements with non-EU countries can benefit the UK's performance is that trade with relatively faster growing countries, so I'm hinting that we might be able to agree some trade deals with countries that are actually growing pretty quickly, such as Malaysia, Mexico, Singapore, Vietnam, good examples, that can drive investment. So oftentimes trade agreements and investment agreements go hand in hand. They flow in the same direction. And whilst we can sell to millions of middle income consumers in emerging Asian countries on the export side. It might also be the case that some of the companies in these businesses in these countries might decide to think more positively about investing into the UK. So TNCs in Vietnam, TNCs in Malaysia might look towards the UK as well if the free trade agreement works well, perhaps establishing manufacturing plants in the UK, which will drive jobs and productive capacity. Trade and investment together, if you like, they're complementary ideas, allows countries, businesses and consumers to benefit from gains from specialisation. Again, put that in red there, that's a kind of nice theoretical analysis point. That's if you've done some trade theory, and also makes markets more contestable, more competition, which then improves the potential trade-off between growth and inflation. So trade liberalisation opens up markets, places disciplines on firms to become more productive, and you often get a better growth inflation trade-off. So that's my second KA point, sort of saying that these trade deals could be to the long run benefit of the UK. However, a potential downside from free trade agreements, and I quite like the idea of a downside or potential downside. That hints at there's a risk of these things. It's not guaranteed, but it's just one of those little phrases you can use, is that UK markets become open to low-cost competition, which can then lead to higher unemployment. So a good example, if we get rid of the import tariffs on Australian farm products, things like beef, many Australian businesses really are big, large-scale mega corporations who can potentially supply at much lower prices than UK farmers. And they may be able to produce at low cost, but they may not necessarily meet UK and EU standards on animal welfare. So you have this double whammy that domestic growers struggle to compete, leading to a rising structural unemployment in farm-dependent regions. Again, a nice concept there. When you bring concepts in, instead of just saying unemployment, use the term structural unemployment in farm-dependent regions, including maybe Scotland and Wales and things. There's also the worry that shifting trade away from nearby EU countries towards Far East Asian suppliers will increase carbon emissions from food miles, creating externalities, threatening the UK's climate change commitments. So that's my evaluation point. Could cost jobs and risks structural unemployment and some environmental concerns. And if you want to, I've already drawn one diagram. I don't need this diagram, but this is a trade diagram. There's the UK domestic supply and demand of beef. But if other countries can supply at cheaper prices, especially with no tariffs, good for consumers. They can consume more. Q2 is the output demanded by consumers, but domestic farmers, domestic growers would not be able to compete at price P2, and therefore their output might squeeze down to Q3, leading to a contraction of output and jobs and investment. The final reason comment doesn't have to be particularly long, but I think it's a good example of where you just try to say something fresh. Don't just repeat points already made. Try to say something slightly different, perhaps. So overall, the trade deals being negotiated by the UK will have little impact on long-run macro performance. In the case of Australia, for example, it's a relatively small economy in global context, and the sheer distance between the UK and Australia will limit trade creation effects, particularly in merchandise products. Perhaps it's easier in services. In addition, existing EU-Australian tariffs were not that high in the first place. So although we've struck a trade deal, European Union and Australian tariffs weren't particularly high already, so not much of a gain in terms of trade creation. But what I'm saying here is perhaps of more long-term significance will be participation in CPTPP, those 11 countries in the Pacific Rim, which already account for nearly 10% of exports, and they actually have several countries that are growing pretty quickly and have experienced rapid development over recent times. And perhaps that's the key to unlocking more trade with those fast-growing, emerging Asian nations with an emerging middle class of consumers. Well, there we go. That was my little walkthrough on a 25-mark essay plan. Hopefully it gives you a bit more confidence on structure and content. There's no such thing as a perfect answer, but I'd be pretty pleased with that one. Huge thanks for joining in. Stay safe, take care of yourselves, and really hope to see you again sometime soon.